Hi, this is Mac with PriceActionTradingSystem.com, and this is Monday, June the 4th, and this will be our chart lesson for today. And this is actually the second time I've done this chart lesson. I did one earlier, and when I got done, it didn't have any volume, so I'm doing it again. So second time through. I may do it a little shorter because I need to get out of here, but I'm going to move on. And this was really a difficult kind of trading day, and all this really was a probably I would say a 10 to 12 point trading range. Even though we had this nice bullish move in the overnight, once the regular session opened, we spent most of it in this trading range area of about 10 points, probably 66. I would call it really 66 to 76. Even though we did break out here a couple of times, it just failed real quickly and came right back in. So I'd call this about a 10-point trading range. And the way you found, and if you back out, you'll see this was the support area from Friday afternoon, and it kind of acted as resistance. We got through there in the overnight, but once the market opened, we quickly came back into this middle of this range and then tested the former support several times. It acted as resistance. So those are all shorts. And by the time we broke out over here late in the afternoon, it was too late to be even looking at trading then. So not much going on there. So really, if you look at it like that, we spent the majority of the day in that 10-point trading range. And it was really hard to find the trend lines today. You couldn't find this one until after about 9:30. And this one was there right out of the gate. And you may not have found it till this bounce, which was again after 9 o'clock. So it's really kind of a wedge pattern, and we were just kind of working back and forth in that wedge till we finally broke out right here and then failed and went lower. And generally that's what's going to happen when you get a wedge pattern. I know all the gurus and all the books say to buy the breakout and go with the breakout, and if it fails, reverse. Well, don't do that. Just figure that most of the time, the majority of the time, 90% probably, prices are going to break out of that wedge or that support resistance area, and they're going to fail and trap people and then go the other way. And that's generally what always happens. And I don't know why they teach it like that, because it's just not right. And so when people teach you to buy and sell breakouts, they'll work just enough to keep you trying to perfect it, and all you'll do is just keep giving your money. So don't fool with it. Assume that they're going to fail and trade it that way, and reverse if you have to, but because it's going to be very rarely that you break out one way and fail. You're usually going to break out, fail, and go back in the other direction. And if you look, this first leg down, this is a nice leg down. There it is. If you measure that, move it over, there's your other leg down, a perfect measured move basically. So that should have been your clue once you broke through here that, hey, we're probably going back down to test these lows, at least a measured leg, which happen to be these lows right across here. The last kind of closes down here in that area. And what happened was this was resistance coming down, and we got above it, and it's acted as support ever since. So just keep that in mind. That's the same thing right here. This was support all along until we got below it, and we did get back above it here, but it never really held. And we came back through, and then it's acting as resistance again until here. It got through it each time, but notice how it never held as support, and it just comes right back in here. So until this holds as support again, we're probably going to keep going lower or keep working back in here. So you got to wait on it and let it prove itself. And you see here, when it did hold, you could have gone long, but it wasn't long till we worked back in there, and then it's holding to the short side again. So anyway, it was kind of a difficult day, but let's go talk about the trades, and I'm going to try to get through this in 10 or 12 minutes since I've already done one that lasted about 18 and was for nothing. And I don't know what happened, but I just didn't have any volume. So first trade was right up here. Let me back out here where you can see it. And really this was resistance from back over here Friday. That was resistance. Look, it was support right here, and then it kind of held as resistance right across there. It held as resistance, and then it just held again today. So that was your first clue. But really the clue was, remember, I'm always talking about whenever you get an overlap far away from the EMA, and if it's near resistance, the odds are it's going to snap back to the EMA, and that's what that is. And we just came right back to the EMA. Now, did we know it was going to come all the way down here? No idea. But that's why you trade it and hold on to a runner. And if you held a runner here, you could have got from 70 to 80. That's 10 points. It's an easy 10-point move, and you're done for the day on the first trade of the day. But you got to be wise enough to spot this entry, and it's at a key entry point because that's resistance. Former support across here is turned into resistance, and until it holds a support, we're not looking to get long up here. We're looking for shorts, and it was a great setup. And we actually had a breakout pullback short here because here's your lows right across there, and look, we broke through, pulled back and tested it. That's a little two-legged move back to test it, and then it's off to the races down again. And this one, you probably didn't get a runner out of this one, but at least you should have got an easy scalp out of that. And then over here, you've got a double top again right across here, and it's right at that former support resistance area, and it's acting as resistance. And it's now we've got the trend line because you should have drawn it off that first couple of swings. Let's see if I can find the end of this thing. You should have had it off those first two swings, and then you would have known to be thinking short right here. And I didn't take it off the first one because it wasn't clear yet. But once you had these two swings and then you come up here and test it again and it makes a double top and a big bearish reversal bar, that's an easy scalp right there. It didn't get any more, but it was an easy scalp. And then you came back and tested it again. It was really kind of risky going short right here because you didn't have a lot of room down to this low. So I didn't mark that one. Plus, look, there's 1, 2, 3, 4, 5 overlapping bars. It's not nearly as good a setup. If you took it, I'm not sure if it actually worked, but I didn't like it because because by this time you got you've got this trend line and we just come off of it. So there was a chance that we were going to get a second leg up. It looked like that, and that's what I was kind of thinking. I'm thinking either we're going to get a second leg up or we're going to come back down and test this low. I was looking for it to go either way, but I was really thought it was going to go higher. But this never acted as support. And when we went up again, look, one leg, pull back, two legs. That's two legs back to test that resistance area. And then a nice bearish reversal bar, so you go short right there, knowing you got enough room now to scalp out before you get back down here or back to this trend line, and that's exactly where it went to. And then here's another two legs, one leg up, pull back, second leg up. It was a failed break above these highs, and it trapped everybody. And look at that big bearish reversal bar. You go short right there, and you actually could have gone short right here if you wanted, because now you're thinking, hey, we're probably testing this low down here. We got a break of the downsloping trend line. We got a failed break out of this little wedge shape here, and we probably trapped people. And so we're at least probably coming back down to here, and you can see that's right where it bounced, right where the previous support was, this little double bottom. And but it didn't last long, and then it's going short again. And I didn't like going short here because we didn't know if we weren't going to get a retest of this high. Coming out of that wedge, you just don't know. And this is really dangerous going short or long through any of this. And I finally marked this one because, look, you got all these lows right across here. And this is a breakout pullback that tried to go higher twice. We broke out here, tried to go higher, pulled back, tried to go higher again. And notice how each of these lows is lower than the previous one. So if you saw that, it was okay to go short right there on a breakout pullback short or right here. But it was a little risky. But if you saw it, it's a good setup. So I marked it, and it was a nice little move down. But that's just a lot of overlap, a lot of dojis and so forth. So it's really dangerous going in and around that stuff because you never know. But the clue was that we're making lower highs and lower lows all the way down through here. And so you can tell the buyers are getting weaker and the sellers are getting stronger, and finally they won over, and we run down to the next support area, which is right across here. And remember, this was resistance first, and then we got above it and active support, and it bounced again right here. You actually could have gone long here, but this one was kind of risky, so the better one was here once we had the double bottom in place. Right across there, right across there, and then we broke below. And anytime you see these couple of ticks lower than this side, that's a stronger than a even double bottom because it traps all those people that buy the breakouts or sell the breakouts. And so all these people were selling down here, and all your longs were exiting. And so then suddenly they realized they exited too soon, and they bought too late or sold too late, and it's reversing, and you go along right there and look at that move. And when you see that move coming up, and now we got a higher high and a higher low, and look, 2 legs back, and you draw your trend line right there because now you got 2 swings. And let's just measure this. And there's your first leg, and you move it over. So you're expecting prices to come to right in here if we're going to go higher. And look where they went to. And all this little sell-off right here that's because there were a lot of people that had their target right here, and they just exited right in here. And they're thinking, there's our 2 measured legs, and we're probably going to pull back to here. Although that isn't what happened. There weren't enough people that exited. A lot of people would wait to start moving their stop up below each bar, or below each, once they get 2 bars in a row. And even if you just use single bars, you wouldn't have got stopped out to here. But if you waited till you had 2 bars, you wouldn't have got stopped out to way up here. So keep that in mind. It depends on how you want to manage your trade. But hopefully you see that. There's leg 1, and then you move it over, and then there's leg 2. And that's where your target, that's what I was looking for. But hey, we went right on through that. So you never know what's going to happen. Just be prepared and be thinking, using our rules of what will probably happen, but be prepared for anything to happen. But this is a nice second entry long, and look at that nice bullish bar. And what you probably should have done, since this is such a big bar, to reduce your risk, drop a limit once it broke above, drop a limit order right in here, and you can see it came back. And keep it above the EMA. That's probably what you got to do. And even if you'd had it right there, it would have dropped down there and got you in. A whole lot better than getting in way up here, and then you still got plenty of room to scalp out. And notice this right here. There's 2 legs up, and then there's 2 legs back. Here's the second leg. Here's the new high, and then 1 leg back, and then we move up, and then another leg back, and then we go higher again. So that's a second entry long right there. I didn't mark that one because it's a very dangerous entry right there, but if you saw it and took it, look what you could have got. But most of the time that would break above and fail and come back down. So I don't like that entry, and I didn't mark it at all. I just marked the second entry long right here, and hopefully you at least saw it thinking we're going to get a second leg like that one right there. Just like when you saw this big leg down, you should be thinking there's a good chance we're going to get another leg down like that, and there it is right there. And so just something to be thinking about. Don't trade based on that, but if you're thinking about that and you see the setup to enter the trade, then that just reinforces it. So that alone, the fact that you got this big leg down, is not enough reason to enter over here thinking I'm going to ride this all the way down to here. But if you find an entry to go short, like right up here, or even right here, you should be thinking, hey, if it takes off, this should be my next likely target, is back down here somewhere. And that's exactly where it went to, right down there where it was earlier. So hopefully that makes sense. And that's pretty much it for the day. And again, this was hard to find because normally we find, off the first 2 swings, and if you were looking for your trend line right in here, this was really confusing when it just shot through there. And so this could have gotten you. It could have tricked you. And but I think the trend line was right here where you had these couple of swings, and that's it. Of course, I wasn't sure until this bounced right here. But then I had a pretty good feeling that, hey, we're definitely in some kind of wedge pattern or trading range. And this is really just a wedge pattern that we broke out of to the high side and failed and trapped everybody, and then made the next leg down to retest the lows, and then the trend reversed. Now we got this trend line up through here. We broke it right here, and now we tried to head higher to retest it. And that's all we could muster up before prices sold off again. So I will say it was a difficult day, and it takes a lot of experience to be able to learn to see this stuff. So I'm not by any means saying that anybody should have easily found this today, but you should have been able to at least determine that this is a big trading range. I mean, look at that. Even if you take off all these other lines and so forth, I mean, hopefully you can see that this is just a big trading range across here, and that's pretty clear. And so that part I do expect that anybody should have been able to find, that this is just a trading range across here. And even if you had it way down here, where the support and resistance was from Friday that I'd already showed you. And that's where I really think it was. This is just a failed break. These are just failed breaks higher that eventually reversed. And so anyway, you just got to learn. It takes experience. It takes practice. Keep working at it. And yes, it's always a lot easier to see it after the fact too. So, but if you can't see it after the fact, you sure can't see it in real time. So that's the key. Okay, this is Mac. I had an interruption there, but we're pretty much done for the day. So I'm going to call it wraps. Hopefully you had a good trading day. If you didn't, it was a hard day. I admit, if you're not good at watching the price action and knowing how to find this stuff, it could have been a difficult day for you. But for every one of these tough days we have, we'll have some easy days too. So come back and make it up next time. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.